Hey everybody, welcome to Financial Freedom Fridays. On today's segment, I want to share with you all some really important advice that helped me 8 years ago when I became a first-time homeowner. Home ownership is really a huge financial obligation, and it's probably one of the biggest financial purchases that you'll ever make in your entire life. So I want to help you guys with the process so that it's not as overwhelming as many of you may think it is. The first step is to really understand the differences between your adjusted and fixed mortgages. Essentially, your adjusted mortgage will change based on the economy of the market. So you definitely, in my opinion, you want to stay away from unexpected changes in your mortgage rate, right? Because when your mortgage rate changes, then your payments are going to increase as well. So you definitely don't want to be shocked with having your mortgage payment increase several $100s. The second advice, and this is really the most important out of all the tips that I'm going to share with you. The second advice is to buy a home that you can afford. And that sounds so simple, and oftentimes people really end up having to go into foreclosure because they find a home they really love, and I think deep down inside they really know they can't afford the home, but they just want to, keep up with the Joneses and get this home. The other thing I want to say is that whatever your bank approves you for in terms of how much you can afford, you want to stay away from that top number, right? So I suggest taking about 80% of that entire number and then setting your budget there. This way, you're not at your top budget and you're not maxing out to buy a home, and then, expenses may arise. And once you're a homeowner, you're responsible for all the maintenance, and that's really important. That's really one of the huge differences from being a renter. So the water, if the water heater breaks or your air conditioning goes out, you're responsible for those expenses. So do not buy a home with the amount that you're approved for. Other little thing is, if you're a married couple, take into consideration one income. Use that one income when you're making your purchase decision. The third piece of advice that I want to share with you all is to work on building your credit score, right? So before you even start to shop for mortgage loans, you want to have at least a 620, right? Just to qualify. But I recommend you having a 720 or more to get the best rate out there on the market. Obviously, there's going to be some lenders who really want your money, really want your business, and they're willing to take you at a higher interest rate. And so what you don't want to do is pay hundreds of dollars every month, which leads to thousands of dollars every year, just because you have a low credit score. So work on building your credit score first. Of course, you can get your credit score online for free at annualcreditreport.com. The last bit of advice that I want to share with you is to start saving, right? The more you have to make a down payment on your home, the less money you have to borrow from banks, which in turn means the less money you'll pay in interest over the life of the loan. Right? So those are the 4 critical steps that I'm sharing with you guys that's going to help to make buying a home less overwhelming and less stressful. Until next week, let's stay committed to being physically, spiritually, and financially fit. Happy Friday, guys.